Once again, the cryptocurrency markets are in disarray, and this time, XRP is the center of attention. Over 400 million XRP have been transferred from whale wallets to exchanges in the last 48 hours, and social media is in full-blown panic mode. Fear is growing, prices are falling, and traders everywhere are wondering if the XRP surge is over before it has even started. However, what if I told you that this isn't a panic sale? What if there is a well-thought-out scheme behind this big sell-off? One that affirms that something far greater than anyone could have imagined is about to happen? Because I can tell you with certainty that this dump isn't the end of the tale after looking at the on-chain data. The next XRP bull run is being put up. First, the headline that is causing a stir in the community. The whale dump. Massive transfers from known whale addresses to exchanges including Binance, Bitstamp, and OKX were detected by blockchain monitors, totaling over 100 million XRP in a single transaction. That appears to be a significant sell-off at first glance. Prices responded immediately, falling by about 10% in a matter of hours. Fear swept across Twitter's cryptocurrency community. They started yelling that whales were leaving ships, that the bull run had been a fake out, and that XRP had lost its momentum. However, the truth is always hidden in the details, and what I discovered when I examined those transactions completely alters the situation. Something intriguing emerges when we examine the Blockchain Explorer data. The XRP receiving exchange wallets are not typical exchange deposit addresses. These are over-the-counter trading desks or pooled OTC wallets. Institutions can purchase cryptocurrency in large quantities using OTC desks without causing significant price fluctuations. These transactions take place in private, off-exchange settings between buyers and sellers rather than in public order books. And this is precisely what's taking place. Retail was not a dump for these whales. To complete a sizable institutional transaction, they moved XRP to an OTC counterparty. This explains why wallet activity and overall liquidity measures do not exhibit panic behavior in spite of the first price decrease. It's accumulation masquerading as surrender instead. Everything made sense when this finally clicked. These transfers' timing is exactly in line with recent actions taken by Ripple's institutional partners. Particularly in Asia and the Middle East, Ripple has been entering new markets with its on-demand liquidity offerings. They want enormous sums of XRP that are ready for institutional movement in order to facilitate those settlements. Therefore, what appears to be whale dumping may actually be custodial holders or Ripple-aligned corporations moving supplies to the OTC desk. Getting ready for impending liquidity requirements. This is a realignment, not a rug pull. Historically, this pattern has always involved a significant shift, a temporary dump, and then a period of quiet accumulation. Explosive has always been the next stage. This is where the situation becomes even more intriguing. If you follow the receiving addresses, you'll notice that some of them are associated with custodial services like Coinbase Custody, Standard Custody, and Fireblocks that are utilized by big investment institutions. These are the same organizations that prepare tokenized liquidity products and ETFs. So ask yourself this. Would institutions be establishing custodial arrangements for sizable XRP holdings if they were genuinely pessimistic? Would they be purchasing tokens worth hundreds of millions? Not by dumping them on public markets, of course, but through OTC desks. In order to build holdings at a discount, institutions build up quietly and allow retail to panic. At the moment, it appears that this is precisely what is taking on. Let's see how this affects the market structure of XRP. Every bull cycle starts with a shakeout when panic drives weak hands out. It's a psychological reset intended to clear out leverage traders, close out long positions, and give stronger holders more power. This 400 million XRP spill is an example of that. Before the breakthrough, this is the last shakeout. This incident resembles the pattern we observed prior to the 2017 explosion, and again prior to the 2021 rally if you overlay it on XRP's long-term accumulation chart. A sharp decline, quick absorption, and a breakout driven by strong demand and limited supply. Additionally, this corresponds with a number of positive technical indicators that the majority of traders overlook. Recently, XRP retested its long-term support trend line on the daily chart, which has only occurred 3 times in the previous 5 years. Every time, a parabolic move came before that retest. On-chain data, however, indicate that transaction volumes and active addresses are rising rather than falling. The drop of activity would be expected if this were a true panic dump. Rather, we are witnessing accumulation. Smaller holders are gradually growing their holdings as whales rearrange the liquidity. Fear isn't that. That's a tactic. The worst part is still to come. There is one transaction from the alleged whale dump that sticks out. A known whale wallet sent 60 million XRP to an unidentified location, an address that has connections to institutional custody solutions utilized by RippleNet partners based on data aggregation. This indicates that these coins are being positioned for something, most likely future institutional acceptance or utility use events, rather than departing the ecosystem. There is increasing conjecture that this action may even be related to impending liquidity requirements for Ripple's collaborations with private settlement networks or central banks. Now, let's assemble this. Retail investors were frightened into selling at a discount after whales transferred hundreds of millions of XRP. Prices fell. Institutional-grade OTC desks subtly absorbed the same XRP, indicating widespread accumulation. Market sentiment has turned pessimistic, liquidity is concentrating, and volatility is soaring. Before a significant upward rise, this is exactly what large participants desire. There is no panic here. It's getting ready. The scheme is clearly visible. You've probably seen this film before if you've been in the cryptocurrency space long enough. This is the identical scenario that occurred before to the 2017 breakout of XRP, the Ethereum merger run-up, and the Bitcoin ETF rally. When the market becomes bullish again, smart money rides the wave that has created anxiety and shaken out retail. When institutions buy cheap, the retail mob sells low, and when the price soars, the same retail investors rush back in too late. XRP is currently in that precise accumulation stage. It's not the whales leaving. Power is being transferred. What is the true lesson here, then? It's not the reason you believe the whales are selling. This isn't panic dumping, it's smart redistribution. It's not a warning sign, but a signal. The blockchain is truthful. It's not fear when you observe significant shifts away from exchanges and toward over-the-counter wallets. It's foresight. By ensuring that the market is lean, leverage positions are eliminated, and liquidity is restored, they are preparing the runway for the next leg up. This is a wake-up call for you. Fear is the starting point of any spectacular bull run. The point of maximum potential is typically when social media is screaming dump. The patient and the knowledgeable benefit from history. The wise money is purchasing the future while others are selling into fear. One conclusion can be drawn from the charts, on-chain data, and trends. Before XRP makes its next big move, this is the last discount you will receive. When others are afraid, be avaricious. When all is said and done, those who grasp the game will be holding the very asset that everyone else will soon be seeking. The whales are not giving up on XRP. Instead, they are setting the stage for the next great rally. Disclaimer. Please keep in mind that I do not hold a financial advisor license. These videos only contain content that is meant to be entertaining. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for